Good morning, everyone. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market, and I'm your host, Kevin Horner. I am joining you from Denver, Colorado. I'm a senior manager and Schwab trading coach, and today I am pleased to be joined by my friend and fellow Schwab coach, fellow senior manager, Brent Morris. Good morning, Brent. How you doing, buddy?
I'm doing great, Kevin. I'm glad we got some new folks out there today, and I want to welcome everybody. Whether you've been around for a while or whether you're new, either way, we're just glad you're here and glad to be with you, Kevin.
Yeah, I'm glad to have you, Brent. Of course, on a day like today, we had a jobs number that kind of blew out expectations. We'll talk a little bit about that, but we've got plenty to get to. And if you are new here, I do want to set the table a little bit. So first of all, we're joined by our friend and fellow coach, Cameron May, there in the chat. Cam's going to get to comments and questions that Brent and I are unable to get to, but we keep an eye on the chat frequently. We try to bring those comments and questions into our discussion. Please feel free to post in there for the duration of our show. Traditionally, we don't address individual symbols in the chat, so don't feel as though we're ignoring you, but generally speaking, we bring our symbols based on news, and we will do that at the conclusion of our segment. We spend about the final 5 or 10 minutes looking at stocks in the news. Now, if you're not already doing so, you can follow the coaches on X. Cameron May is available, Cameron May CS, Brent Moore's CS, Kevin Horner CS, and if you're looking for ways to follow us or engage with us coaches when we are not hosting classes, X is the place to do so. Of course, we also encourage you to be subscribed to the YouTube channel. That way you can stay apprised of all we're doing. We offer you 6.5 hours of live content every day of the week. So great way to stay on top of what we are up to. Now, with that, we're going to get to our disclosure so that we can jump right into things. Please remember that our conversation here is exclusively informational and educational. We do not make recommendations nor endorsements for any specific approach to trading the market. We will incorporate, however, technical analysis in our conversation as we evaluate the market's trends and shifting movements, which we will really address today because the rotational aspect of the market this beginning of the year has been very notable. One of the other things we'll note is that we do work in a paper money version of the Thinkorswim desktop application here. Just know that when you're monitoring what we are up to in the platform. And of course, everything we cover, like I mentioned, should be considered informational and educational only. As far as our agenda, we take a top-down method to our approach here. What that means is we start broadly with the major indices and move our way down through sectors and other industry groups in the news and on the move. So that'll be our general process for you all today. We'll try to hit as much as we possibly can. So with that, Brent, let's take a peek at the S&P 500. Actually, I've got the future symbol up there. I'm going to pull up the SPX to get us started, though. The SPX, we've been kind of banded in this range for the last month and a half or so. It's been about 200 points. Brent, traders may very well be sitting on their hands as we approach this 7,000 level once more.
7,000 is key, not only because we've hit off there and bounced off it in the past, but hey, those big round numbers are kind of significant numbers in the market because they can provide kind of a psychological barrier, if you will. And right now, I wouldn't say the market's weak because we're up close to that 7,000, but we haven't managed to break through that 7,000 level. And you'd probably kind of say we're kind of in this sideways channel right now. We're near the upper end of the channel, but I think some traders are looking for the break above that level and to really maybe have a little bit more positive view in the shorter term about the market.
Yeah, I think that, Brent, when we're up at this elevated level where we have clearly been pushed back a number of times over the last, month or so, one of the things that stands out to me is that our risk reward is a little bit inverted if you want to be bullish here, because the opportunity might be better if we clear that 7,000 level on a close beyond maybe even 7,002, our all-time closing high. But at least changing the risk reward would make bullish traders feel a little bit more confident about their opportunity. Buying now, it feels like we could be rejected, and therefore our risk reward is a little bit inverted here.
Yeah, and just to clarify on that a little bit, if you break through a resistance level, we'll call that around the 7,000 level, If you break through that, we would then deem that to be a little bit more of a support level. Some traders would then say, hey, if that's the support level, then we can move a stop loss, even though they're not guaranteed to get you out, or at least have an exit point below that new support level. And then that cuts down the theoretical risk, so to speak, on that, if you were able to get out at that level, at the tighter level there. Whereas if we haven't broken through that, then when we're looking at a support level, we're looking way down significantly lower than that level. So when you're talking about that reward to risk level, that's kind of what you're alluding to there, right?
Yeah, absolutely. The idea being that resistance, once broken, can be considered support. And so many a trader would say, hey, if we clear that red line, that band at 7,000, well, then that can act as support for us. And you can kind of get maybe a momentum-based move to the upside is how some bulls might look at that. But that's why they might be sitting on their hands here. Of course, the alternative would be remaining patient. And then the question becomes, would those same traders be confident instead to enter on any retreat that might bring you back to near-term support? The matching lows we've seen over the last couple of months. That would also be a challenge, though, wouldn't it?
That's a viable strategy, but you know what? It may never get down there is one thing. And then, of course, if it gets down there, there's no guarantee it's going to bounce. So it could always break through that. So, but that is a viable strategy that some people do. When you have a channel waiting for a bounce off of the lower portion of that channel as a potential entry, at that point, you have a positive reward to risk level, because then the potential ceiling is way back up, in this case at the 7,000 level, and the potential support level where we'd be looking as an exit would be down where that little bluish arrow is that you have on your chart.
So, Brent, the market differs quite a bit depending on which of these indices we're reviewing. The S&P and its very broad allocation has been kind of mired and a little bit sideways. If we take a look at the NASDAQ, obviously a heavy tech sector or index heavily weighted in tech. Again, this is the top 100 of the NASDAQ. In terms of size, what you're seeing, Brent, is that we've actually had a bit of a shift here, haven't we? We've broken the major moving averages. We've also broken a little bit of an uptrend, right? We've made some lower lows. And some traders would tell you, Brent, that the bounce back has merely been to a point of potential resistance. This is not nearly as comfortable.
No, I mean, we're kind of clearly kind of mid-channel right now. The NASDAQ or tech has been kind of traditionally the kind of one of the drivers of the market, or the biggest driver of the market. Well, it hasn't been, it's been kind of sideways, although when we say sideways, that doesn't imply flat. It's been up and down, but it's just hasn't really made that much progress. And if you, in terms of like looking at all the sectors out there, IT has been kind of mid to maybe slightly lower pack over the past month there in terms of its performance. And yeah, right there it is, kind of mid packish. So that's not helping out the market much. It's certainly not helping out the NASDAQ. So that explains why the NASDAQ's not really looking as good as the S&P 500. And furthermore, if we get to the S&P 500 and look at like equal weight, I don't mean to bounce this around too much, but if you look at equal weight on the S&P 500, look at the difference on that SPX EW, how much that has outperformed there's no, like, the analogous thing on the 7,000 level would have been closer to like the 8,000 level on this. This is just shot through, because overall the S&P 500 is doing pretty well, but that tech component of it, among others, but largely the tech component is holding the whole SPX back here.
That's entirely true. And it's the big takeaway that we've had in the market in this first 6 weeks has been this rotation, this move into leadership in areas that have been laggers for us over the last 3 years. Our leadership has been heavy on tech and heavy in discretionary, and we have seen a dramatic move. Like you called it out. Look, I mean, tech is flat on the year right now, right? Yep. Or in the last month, essentially. Year to date, a little bit off, 1.3. But it's the leadership in energy, materials, industrials, and staples that really speaks to this shift. This is kind of late stage bull market situation playing out right in front of us. And the good news is that with these groups providing leadership, Brent, it offers the opportunity for the broader market to maintain some of the elevated levels, but it might not offer the opportunity to see the SPX breaking to new highs. It's very unlikely, or very challenging, I should at least suggest, challenging for the SPX to actually break through if tech is not going to be participating in that breakthrough. So that's why watching something like the sector specifically, or the NDX in the near term, as we try and figure this out, this bounce, like I say, this is a good bounce off of a short-term low. But Brent, if the NASDAQ doesn't recapture the 20 and 50-day moving averages, it has no chance, of course, in the near term to get to the prior highs. And if we can't make an assault or an attempt on the prior highs, well, then we don't have a chance to break out. And that then will likely keep us a little bit more likely under wraps.
Yeah, and we have a couple moving averages, the 20-day, the 50-day moving average. That's what you see on the chart, is the orange and the purple line.
Right there.
Just a little bit below. Throw that kind of, we're going to also say that's kind of right where your potential kind of older support, newer resistance white line is. They're all kind of converging there. It seems like a kind of a key level there, Kev.
Yeah. It would be significant if we could get through it. We don't know. That's one of my key things as we relate to technical analysis. The reminder needs to be that we don't know what's coming. We can evaluate what's already happened. We can apply that to what we think might be going on. But what technical analysis really affords us is the chance to set our risk. And so, Brent, for many traders, if we see that we can't get through the 20 and 50-day moving averages, it increases the likelihood of a trade lower from here in the NDX. Doesn't mean it has to go lower, just means it's less likely that we have more upside before we have downside. And so movement through the 20 and 50 confluence right there would be something that could give traders a reason to get bullish for the short term if we could close above those. In the meantime, maybe sitting on hands once more. So we'll see how maybe tech gets us through this. In fact, when we get to one of the key callouts, just real quickly, the semis up real nicely today. So technology may have an opportunity to carry us, and that could happen. So that does bear watching. Now, the next move we'll check out is in the Russell. Our small caps have really done nicely for us on a year-to-date basis. We've had a very solid structure to the pattern here, Brent. We took out a recent highs in the one-year pattern here. We're back at this 2,500 zone. Took those out. We got thrown back casually to our 50-day moving average, and we have now seen the same thing last week and moved off of it. So, Brent, when you look at what's going on in the Russell, what's the underlying story here, perhaps?
Well, first of all, I'm seeing kind of a flag pattern here, just from a technical standpoint. In other words, we had that move up from the beginning of the year, end of last year, with a nice strong move up, and then it pulled back, and you can see that pull back in those white lines you drew, that channel. That's kind of a flag. We broke above that. That's a bullish sign. So what's driving that? Well, I don't know entirely, but one thing we always mention when we talk about small caps is our interest rates. And interest rates can certainly drive the small caps. When interest rates are lower, and you can see we've seen a drop. This is the 10-year, okay? And for those of you who aren't familiar with this, the scale on the right, so the y-axis, is basically the yield on the 10-year times 10. So just move that over 1 decimal point there. We can see we've had a nice little drop here over the past couple weeks, we'll say, on that. That is only going to help those small caps. Small caps generally have a higher debt burden and are a little bit, they're not maybe on quite as solid a footing as a lot of the larger cap companies out there. And so a drop in interest rates can really help those small caps. I think that may be helping of late here. Now, it's not always this perfect one-to-one correlation. Small caps have struggled even when interest rates have gone down, or they've when interest rates have gone up. It's they've gone down, it's gone up at times, but in general, lower interest rates are going to tend to give your small caps some tailwinds there. I think that may be what we're seeing right now.
Yeah, I think so. Actually, what I was really surprised by in the last couple of weeks has been the elevated level of the yield being above 4.2 and the Russell still maintaining the upward bias. But it was really that last couple of weeks when we were elevated that created that bull flag. So at least that's the relationship we're seeing here. Elevation in yields gave Russell an opportunity to pause. It did just that, found the trend at the 50-day moving average, has moved off of that nicely. So there's at least some clarity from the small cap side of things. And if we overlay that, Brent, with the narrative of what the administration would like to see from yields, then we could maybe suggest that traders are thinking yields are apt to go lower. In fact, one thing we can also look at is the CME Fed tool, which is a third-party tool. This is a straight from the CME group. And this is a view of rate expectations in terms of what the FOMC policy may be. Now, this is not a guarantee in any way. This is merely how traders of these expectations are positioning and putting their money to work. So right now, the expectation for the March 18 is a 94% likelihood, Brent, of steady holding and status quo on our current level. The base rate here, the target 350 to 375. But to me, what was interesting was following this report this morning, the jobs number comes out, expectation for 65,000 new jobs added, doubled it, 130,000 new jobs added. And Brent, yesterday, that number was only 80% likelihood of status quo. Today, it's up to 94% following that report. So we've learned something maybe about the health of the economy here.
Yeah, the jobs report, if we have a strong labor market, which, there's certainly been mixed data lately, but this morning's jobs report has been a real strong one. That would indicate that, hey, the labor market's stronger, probably less of a need to try and cut rates here. And so that is exactly what we're looking at here. If there's less of a need to cut rates, the odds of a rate cut are less than what they would have been. And so it's gone up. And of course, these can change. It's like one of those. Have you ever watched those, Kev? I know you have. Like in sports, they'll say, what's the probability at any point in a game of one team winning? And sometimes I've seen it where, you have the Hail Mary pass at the end and it completely shifts the odds of the game from one end to the other. That CME rate cut tool, the odds can completely shift. But right now, it seems like the markets are not planning on any rate cuts there in March.
At least not imminent, and the likelihood continues to grow that it gets pushed out towards the summer, if not longer, at least according to the CME Fed tool and how traders are currently positioning. But every new piece of data, the jobs report, the CPI, the PPI, they all have impact on that stuff, Brent. So it's something that we continue to monitor in this particular segment in Trader Talk. We try to bring you as much of that macro story as we possibly can on a day-to-day basis. So, okay, Brent, so we've looked at our big boys. We've seen the S&P 500, the NASDAQ 100, and the Russell 2000. Let's talk about the semis, which, like I mentioned, are providing some leadership today, getting a nice bounce. Again, good structure out of this group. But Brent, the key I think about this is understanding that yes, it's tech, but it's not all areas of tech, as we'll see a little later. Semis, obviously trading right back to highs, good structure, bouncing off the 50-day moving average. But we need to pay attention to the fact that while this is going well right now, it is not all of the tech sector. And that's why we're seeing some languishing, if you will, with that. What are you seeing as it relates to semis here today?
Well, in relation to semis, another strong day. I mean, we're up 2.5% today. And so and you can see that kind of little gap from yesterday's candle. That's a bullish candle. Now, are we going to break through the high? Well, I mean, that's certainly debatable. Who knows? The highs that we hit about 2 weeks ago there on this. But a lot of strength in semis and a lot of momentum going up. We had that nice bounce off the 50-day moving average about a week ago, broke through the 20, yeah, that was kind of a potential, a significant level.
Yeah.
As it was coming down to that, the question was it going to bounce off? Well, yeah, it bounced off it nicely. That's exactly what we like to see in the market. And, we'll see. But now we could call that 8380 level or so, kind of a potential stopping point. And not that it's bad. I mean, if a stock moves up or an index moves up a whole bunch in a week, a lot of times it'll take a breather. We'll call that kind of a consolidation. And that's okay. Nothing wrong with that. So if we have a pullback, it's not, it doesn't mean the rally's done. It just means it's, sitting out for a few days and potentially a bounce up, and then kind of gathering its strength to break through the higher level.
Yeah, that's a good point, Brent. One of the groups that we're going to check out next has been showing sometimes how you get those big rallies and the consolidation isn't one of price, meaning price doesn't get pushed down. It's just goes sideways for 3, 5, 7 sessions. So consolidation over time rather than price. And I'm going to use the transport index as our visual on that, Brent, because this is a prime example. Look at this. 1, 2, 3 massive candles to the upside. You would have been within reason to believe that we were going to get that breather, maybe find the 20-day very quickly. That hasn't happened, sir. Look at this, just higher lows along the way. Very intriguing move in the transports. Brent, the transports kind of tend to be leadership group, meaning when the transports are doing really well, a lot of the conversation is around the health of the economy. Can we really apply all that to transports, what we're seeing here?
Well, I'll tell you, it's kind of going back. This goes back to something called Dow theory, and this goes back over 100 years. And that is, hey, we look for things like industrials and transports as a kind of a bellwether for what, for economic activity. And hey, right now, transports have been strong, industrials have been strong, and that's no guarantee. Of course, right now our economy is different than it's been in the past. Right? They didn't have a semiconductors sector back 100 years ago, and or the software or whatever. And so, but you can see just how strong that is. And I love what you just did, Kevin, because you just brought up a longer term chart. And it's just a reminder, look at different time frames. But you can see the strength. Left side of the chart, industrials. Right side of the chart, transports. Both, I mean, if anything, transports is even stronger than industrials here, but both have been on a pretty good run there. For a lot of the 5 years, actually, we were kind of going, well, transports really just aren't going that far. But the last few months, last several months, 6 months or more, it's been different. Transports have really taken off.
They have, and they are both at highs in this week, all-time levels, which would be considered to be a validation of Dow theory. When these are both trading at highs, it validates the bull market according to Dow theory, developed by the same gentleman who created the Dow averages, Charles Henry Dow, back in the late 1800s. That was his concept of broad market health. So a nice visual of the broad market based on Dow theory right here. But real interesting to me is the straight up move in the Dow 30 there, Brent, right? When we took out that resistance, it just began trending right away. And it's one of my favorite reminders about technical analysis is that you break through an area of resistance. It's not uncommon at all to see the index, the stock, whatever, start to trend against a speedy moving average. And in this case, the Dow has just been cruising along, working against short-term levels of support.
Yeah, we don't always look. I mean, each day in this webcast, and I invite everybody to join us each morning here, is we always look at the S&P 500 and the NASDAQ, not necessarily always the Dow, but the Dow's at all-time highs. Or I guess it hit all-time highs yesterday. Today we haven't quite reached yesterday's high,
Not
but
quite.
We're right there. And so the Dow, which is kind of the traditional, broader market index, so to speak, I guess, It's fallen maybe a little bit out of favor in terms of just using as the one benchmark for the whole market, but still it's right at highs and a lot of strength this year.
It is. It really is. And one of the things about that transport move that I wanted to bring to the table is just the reminder that when you're thinking about the transports, there are really three big components there, those being your airlines, your trucks, and your rails. And you can keep an eye on those utilizing the Dow Jones symbols. This is just a quick teaching moment for those of you who are not familiar with Thinkorswim all that much. You can utilize the drop down here and you can look up, but utilizing the $ DWC for Dow Jones, you'll be offered the entirety of the symbols available to you. So industry groups and what have you, this is a really easy way to find them. They're often going to be very simple though. So I bet you're all surprised to learn that the DWC AIR will be for airlines. That's pretty common, right? Another group trading at highs, right? There you go. Developing a little bit of a bull flag up there. Your rails, DWC RAI, no shock there. Making all-time highs, and then your trucks, DWC TRK. These are all very basic, right? I mean, anybody could reason through this. So, and there's your trucks doing another bull flag. So all three groups in that transport space, Brent, showing us bullishness. It's really hard to look at this as anything other than that.
Yeah. So, I mean, I guess what I'd say is those are all good signs for an economy. And our S&P 500 isn't like busting out to new highs right now, but as we mentioned, that's largely due to tech, which is not participating. But even though we are kind of, one of our messages, I think, was it's hard for the S&P 500 to break to all-time highs or new highs if we don't get participation from tech. It doesn't mean that this hasn't been kind of a healthy rotation in the economy, I think, as a whole, in a sense, in that what we don't want, I think, is the economy just dominated by one single sector. We want participation from the rest of the sectors. And we've seen that kind of in the past where the market was moving to new highs, but really it was just tech, and most of the other sectors were really lagging. It's good to see, not tech lagging, but I do like to see stronger performance out of some of those other sectors.
Could not agree more. We don't always get what we want from the market. That much we know, right? Yeah. The market gives us what the market gives us. It's our job to kind of move ourselves into the areas that are giving us opportunities, which is why we discuss the apparent allocation of the market changing here over the last 6 weeks, right? Very different than what we've seen over the last 3 years or so. The real takeaway for a lot of traders, though, is that recognizing this shifting market probably means we don't have the benefit of expecting the level of return we had in 23, 24, and 25, which has been pretty darn fantastic. All of those years giving us better than 17%, and in the first 2 years giving us better than 20%. So the likelihood is we won't get that level of return unless the tech sector picks up in the latter half of the year or immediately, which is, I guess, entirely possible. But in the interim, Brent, what we've noted is that leadership from those cyclicals or defensives, right? And so let's talk about some of those sectors, leading with energy. So a little sector review here once more, going back to not just a review of the sector, Brent, but as we always try, bringing in technical details where possible. I'm going to change this to a 2-year chart because I want to capture the downtrend that we witnessed in energy and the break of the downtrend. Going back to a comment I made just a moment ago about breaking resistance and using a short-term trending moving average as support along the way. How about a very speedy 10-day on the energy space here?
Yeah, if you're staying above the 10-day for, since 2025 at this point, since the very end of the year, for this long, that is a strong trend. The 10-day is a short-term moving average, and just another gap up today in the sector, to be honest. And, we'll see what happens. Now, part of that is, there's a lot of components to the energy sector. One you make, comes to mind is like oil, right? Oil prices have gone up, but it's a lot more than just oil here. And, there's talk about other drivers in the energy sector. But right now, this has just been about as strong as you could get. I mean, you could do a 5-day moving average and we're well above that at this point. And so, sometimes you can use other indicators if you want to try and just get a sense for what you can probably see on the chart anyway, to be honest. Sometimes the RSI at the bottom of the chart, you see kind of how it's red there. That means it's above that 70 level. It only gets above the 70 level if it's been kind of going really strong. Well, it has been going really strong. Sometimes you'll hear that level called kind of the overbought level. Does overbought imply that it's about to go way down? No, it doesn't. It just means it's gone way, way high. And it's not going to stay up there forever, but I can't predict when it's going to turn down at this point. But right now, very strong.
Agreed. And we try not to predict what's coming next, but base decisions on what does occur. A good example of this, Brent, would be the first close in this window below the very quick 10-day moving average, as an example. Some traders would use that as a reason to lighten up any energy investment they may have. And additionally, maybe today, this is a lovely gap move, obviously, but if this gap holds, great, and you keep running, right? But some traders would look at the gap and say, yeah, that's a great ledge, but if it closes back below the ledge we just made, well, then some would use that as a reason to lighten up longs. And again, it all depends on time frame, but if you're the trader who bought this in mid-December and you're up 25, 26%, you're going to be looking for an opportunity at some point to take some profits. And those are a couple of the considerations, Brent.
Yeah, yes. And let me also mention this. If you have a stock, and here's an index, but there's you could have stocks in here that look similar, that has moved up that quick. One approach that some traders use is they will tighten up a stop loss along the way beneath it. And so that if it does reverse quickly, and can it reverse quickly? Yeah, it can go up quickly, it can reverse quickly. Like some people would say even quicker, it's likely. But you can move that stop loss up along the way to try and give you exit points if it does reverse on you or capturing gains. Is that a guarantee? It's not a guarantee because stop losses aren't guarantees. Just because we put a stop at 800 doesn't mean that if this were an individual stock, it couldn't gap down to 700 or something like that, and we're not going to get out at 800 in that circumstance. But just the point is, what you just mentioned about points to lighten up, or points to enter or exit, or using stop losses. These are all means of kind of money management, risk management in your portfolio. And that is a very, very important thing if you're a trader, because you know what? You're going to get it wrong a lot. We all get it wrong a lot. We make a prediction and the market has its own mind. It does that. So the key to winning the game, so to speak, is staying in the game and not letting good trades completely evaporate on you. It's more than just trying to time a particular entry or time a particular exit. That can be very difficult to do. Money management is an integral component of that.
Absolutely true. In fact, Brent, I went ahead and applied a link into the chat for you all. Yesterday, I hosted a class called Building a Stock Portfolio. It's one of the new classes I began at the beginning of the year. And I spent the first 20 plus minutes of that class kind of going through, after a brief market review, going through the elevation of stop orders along the way for the portfolio. So taking advantage of our upward moves and then doing some mathematical calculations and raising stops by those calculations, adhering to a plan. That is a really solid discussion for all traders on risk management and the process behind it. So if you're looking for that conversation, that link that I just placed in there. We'll give that to you. You can watch that at your own time and own convenience, of course. Now, Brent, one of the reasons we're probably getting the gap we are today in energy, take a look here at what is going on with oil. This is the futures symbol of oil. And I want to point out, of course, I want to point out that when we're looking at these futures, these, of course, are not appropriate for all investors, as we know. We're not really talking about trading these per se, but if you are interested in futures symbols, futures trading, etc., make sure that you go through the prerequisites with Schwab so that you can, in fact, participate and place those trades. But Brent, what stands out to me is this shift here. I'm going to draw it in. This looks kind of like a bull pennant or flag. And notice here, the 20 crossing the 200-day moving average to the upside. This has taken on a bullish shape with today's breakout, it looks like.
Yes, it has. That break. So traders would be looking for the break, and in intraday, today's move has been the market's been open for an hour at this point, or less than that actually. So it's not a guarantee for how the day's going to end, and these can change. But as of right now, this is a breakout candle. And a breakout candle is an entry point that some traders will consider using when they're looking to buy something. And again, we're just talking about the price of oil here. We're not talking about actually trading it. But the point is, that's kind of a bullish sign for the price of oil. Now, can that change? Yeah, absolutely. Oil is very geopolitically driven. U.S. discussions, talks with Iran can certainly affect the price of oil. War in Ukraine can affect the price of oil. And, obviously weather can affect the price of oil, just like heating demands, like would maybe affect more heating oil type stuff. But this is all a worldwide market. And just because the supply and demand thing may not be shifting that much right now in the U.S., but worldwide events can certainly affect the price of oil. So no matter what technical analysis we do, if the Strait of Hormuz gets closed down or something, that would certainly trump any other issue that we have regarding oil right now.
That's a really good reminder because, not just narrative, but any tensions globally can absolutely weigh on this. What I found notable, though, Brent, when we did that MarketWatch view, we're looking at the sectors, but there's also an opportunity not just for sectors, which I got here from the public list. So the public list sector indices. But if you go to sectors and industries, now we've got the entirety of the market in these the pockets, right? The industry groups and sub-industry groups. And if I take a look at this on a year-to-date basis, let's sort for it. Taking a look at you're going to see energy, equipment, and services as well at the top, right? In addition to some of these, there's your semiconductors, but commodity chemicals leading the way. I wonder why that would be, Brent. We're going to look at those charts here real quickly, but I'm bringing it up because, again, if we're looking to put money to work in groups that are leading the market, well, this can be a way to go about that, utilizing your sector indices and your industry groups, Brent, to kind of validate what's happening in the market.
Yes, this is a great page. And those of you who are newer with Thinkorswim, notice where we're at. We're on the MarketWatch tab. We're on the quotes page. Kevin showed you how to bring up those two separate watch lists. They're both public. You all have access to them. And you can control what the columns are. Maybe you don't want to look at what the percentage return is. That's what we're talking about right now. But if you want to look at PE ratios or something on individual stocks, you could do so. But the point is, you can change those columns. Kevin has a percentage change column. That's today's change. As a percentage change year-to-date column, percentage change 5 to. So these are columns you can add, and you can gauge the strength of those individual industries, if you like. And so if you're seeking those stronger industry groups or stronger sectors as, fishing grounds, so to speak, as to where to find stocks, that is one approach that some traders use I can't think of a more efficient way than just making use of this page. If you haven't used this page before, play around with it. You know, it's like anything else. The first time you use it, you just got to play around with it to try and figure it out and learn it. The more you learn it, the more of a tool it can be for you. So I think this is a great page you brought up.
So thank you, Brent. But I've got to address some of these questions, and this is going to a couple of these questions and details are going to shift our close to this conversation today a little bit. But I think it's important to address with those of you who are here live. So first of all, as in terms of finding the companies that might reside in these groups, the easiest thing that I've located is the scan tool, and I like this idea, Brent, because we can just clear out we can reset the scan and just say, yeah, show me stocks that are take a preferred index. You can either keep it as all stocks if you want, and then just say intersect that with the industry group. So show me all energy regardless of size. Now that scan is going to take a minute because, as you can see, I'm going to have a few hundred matches, right? But that's one way that you can build that list. A lot of traders, however, would, instead of starting with all stocks, would break it down by S&P 500 or Russell 2000 or NASDAQ 100, and then scan within that space to get those equities. Because commonly, Brent, traders want the ones that are part of indice groups, not just, you know, flying blindly amongst the rest of the market.
Yeah, you're going to get a lot of penny stocks if you just say everything in a particular industry. And, you know, most traders have an aversion for that. But so S&P 500 or whatever, like you mentioned, different indices, and then you can run that scan. And then you know what you can do if you wanted to? You could save the scan. And then what happens in Thinkorswim once you save the scan is it becomes a watch list that you can pull up on the left. It's your personal watch list instead of the public watch list. And you can go and you can then just pull that up. There's, you know, you have one that you've just an energy watch list that you have one. I have one I just kind of labeled S&P 500 energy or something to that effect there. And I have that for 11 different sectors. It'll take you 5 minutes to set it up, because once you have this page up, all you need to do is change the whole intersect with energy to intersect with communications or whatever, and then save it and repeat that. And then you don't even have to run the scan every time. You can just look at your watch list each time in the left-hand column, bring it up. You'll have a list of those stocks there.
Yeah, it's so convenient, Brent. It's one of my favorite actions to take to manage my trades and day to day and look at the market. I wanted to also answer the question about that number 5. That number 5 is the link into the tools. So this way, if I click any of these symbols from here, if I wanted to see that air freight and logistics, for example, I'll click the 5 there, and then I go to my chart because I got the 5 there. It's just going to load that. So anything that's linked up will be right there. And I also have the same thing here in my watch list, the number 5 symbol, so that as I move through a watch list, I can just click, 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 and now it links into the chart. So very easy, very quick access. The process that a lot of traders go through is this top-down review into sectors. Where's our leadership, and what are the leading stocks within those leading groups? Now, Brent, we are near time here, and the market has shifted quite a bit, and I wanted to address it quickly in our final moment here. Pulling up the SPX, we've had a bit of a shift because that candle, as you can see on the daily, is now turned bright red. But look at this on the 5-minute bar, and you can see, Brent, we got rejected right at the intraday high, 69.94, so a slightly lower high than we have experienced. Now we've got the pivot points in here intraday. We fell through the pivot, which is the combination of yesterday's price action essentially, and we've got a little bit of selling here. So it looks like at the moment a bit of a short-term rejection. But what kind of cleaning up thoughts do you have as we wrap the session today, whether it's tied to the move we've seen right here or anything else that we were unable to get to because our time ran short?
The market can change very quickly, as we've seen. And so just be prepared with in your head what you're going to do ahead of time. for a lot of longer term traders, they're going to say, man, you know, the market goes up, market goes down. I'm not going to worry about little intraday moves like this. And I'm not suggesting that you react to every, you know, 5-minute move on the chart or something like that.
Sure.
But know your entry points, know your exit points, know your risk management as you're looking at the market, and do your best to just kind of follow those and take emotion out of your mind as you're doing that, because emotion can you know, it doesn't help your investing. So if you think about it ahead of time, it tends to help your trading abilities there.
Well, truer words were never spoken, Brent. Trade management is about as key a component to being a trader as anything. So I could not agree more. I want to thank you, of course, for a very good discussion again. And, you know, for all of you who are new here, Brent and I host this one together on Wednesdays. So we've got a really good consistency to what we do. We hope you'll come back and join us. But don't forget, follow us, coaches, on X, Brent Moores, CS, Kevin Horner, CS, and of course, Cameron May, CS, there in the chat. Big thanks to Cam for managing things for us today. Remember to make sure you're subscribed to the YouTube channel. If you liked our discussion, hit that thumbs up button below, because we do get these archived. So we get them reviewed, they're placed into the archive and ready to go for you. So that thumbs up button will help us out quite a bit. But as always, we'll be back. I will be back at least tomorrow morning. Thursday is a traditionally solo show for me in Trader Talk, and I will work hard to address the stuff that we were unable to get to today, like precious metals, among others. So I want to thank you all for being here. Hope you all have a fantastic rest of your Wednesday. We look forward to seeing you again, though, real soon.